Hey everyone, welcome back to Corporate Decoder, the place where we dig into the documents that companies don't exactly shout from the rooftops. Today, we're cracking open NexGen Energy's Form 40F. It's like peeking under the hood of a uranium exploration company, and trust me, there are definitely some radioactive disclosures inside. This Form 40F is basically NexGen Energy's annual report filed with the US Securities and Exchange Commission. It's required because they're a foreign company listed on the New York Stock Exchange. The report covers the fiscal year ending December 31, 2024, so we are going to look at the past year for this company. NexGen Energy is a Canadian company focused on uranium exploration and development. They're not actually producing uranium yet, they're still in the stage of finding it and figuring out how to get it out of the ground. The big kahuna for them is the Arrow deposit, which is part of the Rook-I project in Saskatchewan, Canada. This area is known for having some of the highest grade uranium deposits on the planet, so it's a pretty valuable piece of real estate. The company has its common shares listed on the New York Stock Exchange under the ticker symbol NXE. This report uses a bunch of other documents to get the full picture. These include the annual information form, which gives a broad overview of the company, the management's discussion and analysis, where the company explains its results, and the audited consolidated financial statements, because numbers don't lie, even if companies sometimes try to make them look better than they are. Now, if you're getting into the weeds of a mining company, you're going to hear about resource and reserve estimates. These are basically educated guesses about how much stuff, in this case uranium, is in the ground. What is important is to remember that these are just estimates. Canadian standards are used to make these estimates, and they might not be exactly the same as the standards in the United States. So if you're comparing NexGen to a US company, keep that in mind. The executives of the company, the CEO and CFO, have to sign off on the report, certifying that it's accurate and that the company has good controls in place. This is a result of the Sarbanes-Oxley Act, passed after some major accounting scandals. Basically, it is there to make sure the people at the top can't plead ignorance if something goes wrong. NexGen's management, including the top dogs, looked at the company's disclosure controls and procedures. These are the processes in place to make sure that all the information NexGen is required to share is accurate and on time. They concluded that these controls are effective, which is good news, suggesting they're on top of things. The company's management gives their own report on how good their internal controls are for financial reporting. Internal control over financial reporting basically means how the company makes sure that its financial statements are accurate and reliable. NexGen's accounting firm, KPMG, also gives their opinion on NexGen's internal control over financial reporting. This is an outside view, so it gives more trust to the statements made by the company. It's like a second opinion from a doctor. During the past year, NexGen didn't make any big changes to its internal controls over financial reporting. This suggests that they think their current system is working fine. If there were big changes, it might be a red flag, meaning they had to fix something. NexGen has an audit committee, which is basically a group of people on the board of directors who are in charge of making sure the company's finances are in order. The company says that Trevor Thiel is a financial expert. This is important because it means they have someone with the skills to really dig into the numbers. NexGen has a code of ethics that applies to all the big shots. This is important because it sets the tone for how the company expects people to behave. The company has to disclose how much they're paying their accountants, KPMG, for different services. This helps investors see if there might be any conflicts of interest. NexGen's audit committee has to approve all the work that KPMG does for them ahead of time. This is another way to prevent conflicts of interest. NexGen says they don't have any off-balance sheet arrangements. These are basically ways of hiding debt or other obligations, so it's good that they're not using them. NexGen talks about how much cash they need and where they're getting it from. This is super important for a company that's still exploring and developing because they need money to keep going. The members of the audit committee are Sybil Veenman, Richard Patricio, and Trevor Thiel. Not applicable. Because NexGen is a Canadian company listed on the NYSE, they don't have to follow all the same corporate governance rules as US companies. However, they have to tell investors about the big differences. And finally, the report is signed by Benjamin Salter, the Chief Financial Officer, which makes it official. Now, let's get to the numbers because everyone cares about the financials, right? Remember, NexGen is still in the exploration stage, so they're not making a ton of money. This means you will see that they're spending money to find and develop uranium deposits. They ended the year with around $215 million in cash and short-term investments. That's a pretty decent chunk of change to keep the lights on while they work on the Rookeye project. One thing to keep an eye on is their operating expenses. They spent around $70 million on exploration and evaluation. This is the cost of finding and assessing those uranium deposits. So, what's the story here? NexGen is burning cash as expected for a company in their stage, but they have enough cash to keep going for a while. Okay, so what's my take? NexGen is in a high-risk, high-reward business. If they can get the Arrow deposit up and running, it could be a game changer because that deposit is one of the highest-grade uranium deposits in the world. The biggest risk they face is the price of uranium. If uranium prices stay low, their project might not be economically viable. There are also political risks because mining projects can be controversial. But if they can navigate these risks, NexGen could be a major player in the uranium market. The world needs uranium for nuclear power, and nuclear power is an important part of the transition to clean energy. Overall, NexGen is a company with big potential, but it's not for the faint of heart. You need to be comfortable with risk and willing to be patient. If you think uranium is the future, NexGen is definitely a company to watch. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more deep dives into the corporate world.